Hey Matt,
Yo,
how you doing?
good. I've been just ate. Pretty good now. Late
Yeah,
lunch.
what'd you eat?
I made like in the slow cooker chicken breast and onions and mushrooms, and I just put some sauce and seasonings. What we're gonna have for dinner tonight, but I usually eat it for my late lunch. I don't eat dinner.
All right. Okay. You skipping dinner lately?
Yeah, I've been doing something a little different. Normally I just eat dinner. Now I'll
Hmm.
eat like a late lunch and then I just won't eat dinner.
Okay.
Yeah, nothing to
So
do
two
with
meals a
anything.
day?
Yeah, 1 to 2 meals a day. Some days
Yeah.
I have two, some days I have one.
Yeah. And what, just to save time, or
Yeah,
you
it's more
find
of a
you find
time.
it more comfortable that way?
Yeah, yeah.
Yeah.
Time
Oh
wise,
wow.
comfortability wise, yeah. I used to do
Yeah,
the
yeah, yeah.
intermediate fasting a lot. That's why,
Uh-huh.
where I
Okay.
would eat like in a 4 hour window or something, but
Oh,
that
yep.
just seems too too restrictive. I just do a, what do they call that? Instinctive eating.
Okay. I
Yeah,
like it.
a
Yeah.
little bit better.
That's probably the personalized plan would probably come out something like that, right? If
Yeah,
they
yeah.
looked at if they looked at everything and your genome or whatever,
Probably, hopefully, I would
right?
hope so.
Right. Yeah, instinctive. Unless you're instinctively just eating like chips and ice cream or something.
Oh yeah, no. Usually it's a what I would consider a wholesome meal. You know, got some carbs, some protein, and some vegetables.
It's good, dude. Yeah,
I try. So how you
yeah,
been?
right on. Oh, pretty good, pretty good. Well, I was watching the market today, man. How's that?
I've been a lot more trading. Well, I haven't been actually trading.
How's
I've
that
been
market?
watching, and
Okay.
we've got some good action both sides. We've been closing kind of. It's like we try to close flat. I don't know what it is. It's like the
Hmm.
market's trying to not blow itself up like usually, but then today it really the Qs anyway really went up. Although we're getting
Yeah,
really close to really close to a resistance level for the
right.
year. So I'm kind of watching on um the futures chart, trying to make sure that we don't blow ourselves up over here. Because
Right, right.
right around, got a lot of overhead supply right around that 14.7 level. Yeah, so I think that's going to be a test. If we can go through 14.7, well, actually, I think honestly, right now, I need a little bit more consolidation around this level to build a base of support before we can really start getting comfortable going. Like before I start adding into like my IRA positions, I have to wait a little
Okay.
while.
All right, all right. To see the pull back from this bounce.
Well, I mean, it's been like 1, 2, 3, 4 up days. Yesterday was like what, almost like flat, and then another big up day. It
There was a down day in between. Was it Friday or something?
was
Right?
yesterday.
Oh, right, yesterday.
Yeah, yesterday we
So
had a small down
yeah.
day.
How about GameStop?
I know
That's
those
the
guys are
question. What's your
back at it.
options position in GameStop right now?
No option position in GameStop, but it did have a huge,
Yeah.
what is this, like 20%,
How
30%
about
day.
how about AMC then? It's hard to, the scale on GameStop's a little much, yeah, at 100 and what is it, $120 or something now?
Yeah, 120, 21, 122.
Yeah.
But the move between AMC and GameStop, they were pretty. I mean, it was. I didn't do anything, but I believe GameStop picked up and then AMC picked up. So you
Like
could have,
silver and gold.
yeah, you probably could have played not on the hourly, but I think I saw it on the, was it the 5 minute? someone had talked about it in the chart guys chat room, and I was like, again?
Oh, that's good. Yeah, interesting. Yeah, pairs trading them like against each other.
No, they were just saying that GME is up, but on a percentage base, AMC is not up as much. So check it
Yeah.
out to see if they're gonna try and correlate. But it looks like I don't know. It's
Yeah.
really hard to play these because the options don't get very like you can't go short, that's for sure. And if you go long options, like if you buy puts, it never works out because like you buy a put, let's say you buy the in the money 18 put today for like on the monthlies, 23 days left. You buy the put for $2 at 18, thinking that it blew its head off and it drops to 16. Your put expires like for $2, which is the $2 you bought it for. You might as well just short the stock at that point, you know, because the options are worth too much. The premium in the options worth too much. And then if you short the option,
Yeah.
you leave yourself with no, like what happens if it does go down or if it does go up? You have no hedge. You got to buy stock again. So these are the kinds of positions where like the only way to really play it is to go either short stock, buy stock.
Oh.
Yeah. You could go
Yeah.
long. Long is another one.
Yeah.
You just long calls. If you think it's gonna go to the moon, you long calls. But
Right.
that's I had an AMC position back in, I think it was May when it had the second up. I had a covered call and I actually lost money when it went up. My short call option got more expensive faster than the stock price went up.
Right. Yeah. No, I don't know what I was doing today. I don't know if this makes sense or not, but like I had an out of the money call on AMC that I bought the other day, right? And it's way out of the money. But today I saw, options are up so much, you know, rather than closing my call, I sold a higher strike call in the same month and got all my money back from the whatever I had put down as premium on that first call I bought a few days ago. So now I've got a vertical, and then I figure I can roll the short leg closer and start narrowing the spread to collect additional premium as time goes on.
Yeah.
Does that make sense?
What I would have probably sold a back ratio spread on top of it, depending on how much.
What is that? Back ratio?
You
mean a
sell
calendar
two
spread?
and buy one. So you would sell two of the higher calls and then sell two of the higher above your long call and then buy one on the top and create like
I'd need to collateralize with cash though, right? Or margin, however.
So you would be
because you're short two calls.
You'd be short two calls, but you would buy one on the top. So like let's say for example you were long the 24 call and you sold 30 call. Then you would sell another of the 30 call and then buy a 35 call and create a you would create a butterfly. Because that would give you more premium, and then you would just let the trade expire as like a, you know, you let it go as some kind of a, what's it called, like a one-shotter, you know. If you think it's gonna go higher, it goes higher. Versus right now you're taking a bearish approach. You have a bullish position. So like if I was
So you mean I should sell more calls? Wait, that means
well what so if I had a long call, like let's say I had the 24 call. The 24 call in AMC in April is trading for 82 cents right now. And let's say I bought this call for 50 cents. So I sell the 28 call, which is currently 50 cents. And now I'm theoretically break even. but I'm only gonna make money if it goes higher, right? Higher than 24. So
Right.
instead of rolling down my long call, I would just sell 2 of them, and
Mhm.
then I would now collect 50 more cents. And then I might say if I had the 24, I'd have to buy the 32. I'd buy the 32 call to prevent any losses. And I'd buy the 32 call for 38 cents, and I would collect 12 cents more. I would be net credit in the trade. And now
Mm.
I would be able to say, okay, if GameStop goes up to 28, bank, I make $400, right? Best case scenario, free $400. Worst case scenario, either it goes above 32, my last long call, and my whole spread expires worthless because 400 between my long call and short call, and another 400 between my short call and my long call. But if I'm thinking it's gonna go down, right? That's why you sold the call on top of it. If it goes down, at least you keep that, $12 or whatever in credit that you would have collected.
Yeah, well, I thought I capped my gains by making it into a vertical, but I was able to collect back the principal by selling that
Yeah.
second option.
So what I was saying was, if you were bearish on the move,
Oh,
because
okay.
right, because
Yeah.
thinking about just rolling down your long call,
No, I'm gonna roll down the short call.
down the short, right? So
Yeah.
essentially you'd be bearish, right? You think the stock price is gonna go down.
I guess I just want to continue to collect premiums.
Right, you kind of like writing a covered call against your
Call
long.
against my long call. Yeah.
But how far away did you sell it? Because
like next year. They're both next year.
oh, they're both next
And
year?
I think, yeah, December, maybe December this year, January, far out.
Oh wow.
Because it was real cheap, right, for that option a few days ago. I was way up there. I forget what it was. Sorry, I'm not looking at it right now. 75 or something. And I think I sold like the 110 against it.
Well, so you bought the 75 for like $1.
Maybe not even. It's cheap. I was like, I forget already, 60% up on it.
And then you sold the 110.
Something like that.
Okay. So you got a lot of time.
Yeah. So that's why I figure it's a huge spread, right?
Mm-hmm.
AMC will probably, I'm thinking it, you know what I mean? Like, oh, it happened last year, and then everybody's going to hear about it now, right? All these retail investors, AMC, GameStop, they'll be talking about it for a couple of weeks, and pump and dump once again, right?
The only problem
I guess I'm bearish on the long term.
Yeah, because the only problem is that if the stock price increases again like it did, then your long call could potentially be as expensive as your short call could be as expensive as your long call. I mean, like
at some point in time.
Yeah, because they're so far out of money, the volatility kind of smile, right, is gonna make your long call and your short call kind of rise at almost the same rate. Because it looks like the delta in it is like the 75. So the 75 110 call spread out in January has only 6 delta.
Okay.
So what that means is, for every $1 the stock goes up, your position gets 6 cents.
Right.
So it's a super small delta position. So it's gonna be more affected by volatility. Where's the volatility in this thing? The volatility on that, my gamma risk. Where's my volatility? Vol. Implied vol. There it is. 0.05 and 0.04. Yeah, they're almost exactly the same for volatility. So they're kind of gonna move kind of concurrently. But you're right. If you do nail it, it could potentially go super high.
Mm,
It,
mm.
these
I
like I
figure
said, these
if
these are hard to play
75's
for
in the
me.
money,
Oh yeah, 75
right,
gets
then
it in the
it'll
money.
be a spread. And then you know, over time, I don't know. I just
I
like the
wonder if
idea of
you could.
having some room to roll around. And then you know,
If
I
you
just
bought,
thought, oh wow, these things are almost worth the same amount of money right now. Wonder
yeah,
if that's gonna stay true, how long that's gonna stay true. And I thought to myself, well, probably not that long, right? At some point, the 75 option is gonna be worth something different than the
the
110 or
110.
whatever it
Yeah,
was.
once the volatility gets sucked out of it, it's gonna become practically worthless, and then you can play
Yeah,
another one.
yeah, I can just buy it back,
If you
roll it
do what
around.
I would do, the 10,
The 75 will be worthless at some point too, man.
yeah,
By January.
the 10, geez, the 10, the 10 call in January is $10.
Yeah.
Quite literally, at this
Wow.
point, you might just buy the stock.
Well, that's in the money, right? 10. I mean, what?
Yeah, the
What is
stock it's
AMC right
trading
now?
at 18.
Yeah. Yeah.
I'm just
I guess
trying to
maybe selling at the money calls, right? But who knows? The AMC could level up, right? They do have movie theaters, don't they?
presumably. I'm just trying to see if in order for me to get okay, Ooh, yeah. So if I were to buy, would I do it like this? I would probably calendarize this. So I would probably
Yeah.
buy the 12 today. If I saw the move today, I'd buy the 12. Actually, the earnings are in here, so I could buy the. Wow, it's so expensive to buy the earlier ones. Like you may as well buy January.
Yeah.
12 in January is $9. The 12 in May is like 7.5.
Yeah.
So I'd probably buy the 12. And if I think it's going up, I would sell the May 20. Yep. Sell the May 20 for 250. I'd be $666 to trade. I have the May 20 as my short call. The January 12 is my long call. If it ends at over 20, I make 100 some bucks because the difference between the call spread or the long call and short call, 800. But I probably roll. I mean, to be honest, if it was that high, I would roll out, or I would just sell my position. It'd be worth more than $800 at that point. But it's
$800 from 160.
No, it would cost 660 for the trade.
660.
Yeah.
Oh, okay. But the profit would be 800.
Yeah.
Wow.
So it's
you can double your money, huh?
It's a pretty good trade.
You could have just doubled your money buying GameStop at 75. Was that last week or the week before? Be almost there already, right?
Yeah, because when the earnings came out for GME, it kind of killed it, right? Is that what happened?
Yeah. Yeah, they have stores. I saw them they're at Kahala Mall.
Yeah.
That's real.
Yeah, they
That's
closed
a real
last
company.
week. 17th, they closed at $75, or they were low at 75, the low of 75.
Yeah. And I had a trend line drawn from last year from, some lows. And that 75 was like when it bounced, it went through a little bit, but basically bounced off this trend line from a year ago. So I was really impressed by that. I thought, wow, it's incredible how these things work. NASDAQ too, right? Bouncing off trend lines.
Well, so for stocks, the bid and ask spread are not nice in here.
For what?
GameStop.
Yeah, GameStop. It's hard. It's hard, man. Not like AMC.
the risk went up a lot here.
Yeah.
So oh man, let's see. I play a butterfly. Oh,
GameStop's
you
in.
can. See if
Yeah,
you
you
bought
should get
a
something in there, man.
effective move butterfly. Could I get? Oh, I'd have to come out here. Yikes! Oh, that's too expensive.
Buy some stocks.
This would be 490 in buying power. So what I usually do if there's an explosion upside, like what I do for like XOP when gas went up was I buy a broken wing butterfly,
Mhm.
which is buying a smaller call spread and selling a bigger call spread, and I collect money for it, right? I collect a credit, and then my hope is that the stock ends lower. Let's see how much I could get for the weekly. Ooh, not very much. I'd have to come real close. Do you know what's happening?
Yeah. There's these like guys on their computers right now taking popular scenes from popular movies and then adding like crazy statements that aren't true about GameStop and AMC and the fight against, you know, society and whatnot. And then they're like probably right about to like post them into Wall Street Bets right now in about 24 minutes. And then all hell's gonna break loose. That's probably it. Yeah.
Could be. I'm looking at this because I'm looking to see if I can get a free butterfly.
A free one. Yeah. Because you just end up selling enough that it's like you want $1 or something, or receive $1, that kind of thing.
Yeah, it's hard
Cool.
though, because I can't get close enough. The 19 half, 20 half, 22 half, it's free, but I'm risking $100. If it blows over 225, I'd be out $100. But if it stays between 19.5 and 225, I'd be or 21 or 21.5, I'd be up $100.
Yeah.
Not a good probability trade, but it's a free butterfly. Well,
Yeah.
$100 in risk butterfly, but the trade only costs commissions.
But I don't know. In my opinion, I think the most tantalizing possibility is the breakout above previous high. Right?
That would be nuts.
That's the reason to get in. Yeah. Otherwise, I mean, there's a lot of other charts out there.
Yeah, there's much higher probability charts out there for sure.
Right. But that's what I would say. And I mean, psychologically, don't you think a lot of people are like, oh, I wish I had bought GameStop when it was, you know, $100 or whatever, and it went up to, what was it, like 490 or something like that?
Yeah.
Yeah, and now their friend that told them about it last time is telling them about it right now, just like I'm telling you, man. Watch. People the next day, they're gonna be like, oh man, now's my chance. This is the time, right?
Yeah.
And then boom, GameStop just goes like super ballistic for a second. I don't know. It's possible. I'm not saying it's gonna happen.
Right. No, but it's true. It could be. I mean, you could have AMC blowing up because they're like, oh, we missed it. We can't do GameStop anymore. Let's just go with AMC instead.
Yeah, and they're gonna be like, you know, saying the same thing before they said last year, right? Let's just be retarded. I mean, you don't know how much that resonates with people, Matt. Think about it, man. Let's be stupid, right?
Yeah. No, you're right. It
blindly
does.
throwing their money in. People that don't even buy stocks. Like, remember our your friend, our mutual friend from UH,
Yeah,
he got into
Steve.
the whole. Now he's into stock trading, right?
Yep.
Yeah. What do you think he's gonna do? Right? Like people like that, right? Like,
Gonna
oh,
tell
back
all
in the
his
GameStop,
friends.
right? Yeah. That we're like, oh, right.
So
So
the
I'm
only
thinking
thing,
that's the play, is a crazy parabolic move.
yeah, so I would probably do, if I was thinking about going in and playing this, I would sell, yeah, I would do this. So give me 100 delta. Yeah. I would buy 2 of the 14 May calls and I would sell 1 of the 18 May calls.
Okay, it's AMC, right?
Yeah.
Yeah.
It
So
would give
one
me, it would give
long
me a,
114, short 218.
no, a long 2 14, short 1 18.
Okay. Okay.
And
And what
you're
month?
playing for upside. You
Yeah.
all in the trade is 750, so you're buying in at like 40% of the stock price, but you're also getting 100% of the stock movement.
Yeah.
So if I were to play this, that's what I would do.
Yeah. But I mean, so then what's the exit from there? If AMC's 150.
If AMC goes up to 150,
Yeah, some crazy number.
I don't know. It'd be whenever
Blows
you're
through
planning
both
on
strikes.
selling the stock.
Yeah.
Because at that point, I mean, you're one. So you're one. So the reason why you would buy 2 and sell 1 is because your one short call would eliminate the extrinsic value of your long calls. So
Okay.
you're buying 100% of the stock movement and none of the premium.
Mm,
So at time of expiration, you would be at the same loss as if you had just had stock. So I'm not buying any option premium.
yeah.
So like
And so wait, what month are we talking about?
May,
May.
I'd buy it close
Yeah.
because I'm looking
Yeah.
for the movement soon. And to be honest, I think how much would this cost in April? It probably would cost around the same amount. Yeah, in April it costs the same amount. This trade.
Okay.
Same cost, 735-ish. In May it's
So you might as well buy the May.
750. Yeah, I might as well buy them in May. Gives me a longer time. So that's what I would do if I was willing to throw 735 into this idea.
Yeah. Well,
good
so
idea.
what are you willing to throw 735 into? Where do you see certain patterns or movements or want to make predictions or speculations?
Oh, I don't think I would agree with me because you know Mullen Automotive.
No.
So MULN, they had a crazy move. Okay, so this stock went from like $10, $12 in the end of last year, November, and just sold off. It sold off into the like 94 cents. And then there's some fake news that the company came out with that said that they might get acquired by Apple, I think.
Whoa.
And then they shot up from like $1 last week. It got up to like $4 this week. $4 this week.
Yeah. Wow.
And then I got out for a scratch and I got a free put out of my butterfly that I made. And
Okay.
then I was thinking it's going to hit consolidation because it was weak, it was selling off. And then as soon as we got on this call, this thing shot from $3.02 to $3.56. So
Wow.
I was completely wrong. I was looking at it, it was like lightning consolidation on the 5-minute, the 15-minute, and I looked at the hourly and I was like, oh, this thing is done. Like we're done,
Yeah.
you know. Like we had huge sell-off at the end of yesterday, like right on that last 15, last on that last hour candle. Huge sell-off, sell-off after hours, sell-off pre-market, bought up in the morning, and then just down from there. And I was like, all right, it's done. We're done with this squeezing
Yeah.
and then I saw AMC and GameStop like these people are gonna take their money out of this thing and go to AMC and GameStop, and I was wrong.
Yeah. They got other money for that, huh?
I guess so. I guess people. I mean, what was it? Was it CNBC that said there's a lot of money on the sidelines?
I think so. Household
Yeah.
savings is good too, right?
Who's that?
Isn't it? Isn't household savings pretty good right now?
Yeah.
It's junk.
Yeah.
It's
Household
supposed to
savings
be
is
pretty robust, right?
yeah. People are doing well.
Yeah. So
Yeah, and
who knows?
it's at least I got out of my Nvidia long this morning. I
Okay.
got out of my because Nvidia's
Yeah.
down today.
What happened? Earnings was bad. I saw it when it started dropping.
I don't know what they had an investors call at 10
Yeah.
Pacific Standard Time, and I was out before then. And then my
Okay.
AMD position, I'm actually still up money, but my AMD position's a lot more neutral than anything. I just have a iron condor on in there. I'm still bullish. I'm sorry. I'm still bearish on gold, but that's not working.
Yeah. Why are you bearish on gold in the face of inflation?
I just think it got too heavy. I think it's my hedge against the market. So I think if the market, because I'm bearish on the markets, if the market goes up, my gold hedge should go down. So I have a small hedge on gold and then a bigger hedge on the market, a bigger short on the market. So that's
very traditional, huh? You hedge the market with gold, huh?
reverse wise, yeah.
Oh.
So
I'm
shorter on the market.
Yeah.
So I'm short gold because if my short market doesn't work, then the market should go up and gold should go down. So I'm short the market.
Right.
I'm long
just
the
negative
market
on both sides, yeah.
Yeah, I'm short the market via being short gold. I'm long the market via being short gold.
As a hedge against being short the market.
But you know what is making me happy though? I'm long Bitcoin and Ethereum.
Yeah, well, that's good.
So those two have been doing really well. Bitcoin's up to 42.7 today, and I think Ethereum is over 20. Is it over 3,000?
Yeah.
What the heck's the futures ticker for Ethereum? I don't even know. I don't even know what the ticker for Ethereum is.
Yeah. I thought it's like ETH or something. I don't even know.
No, hang on. I'm just gonna go to the cryptocurrencies.
Yeah.
BTC, ETH. Oh, it's just ETH with no it's ETH with no slash.
Oh.
Okay, ETH is 3,000. So it's up there.
Yeah. That was pretty crazy. But you know, my fear is seeing this market, like all of them, NASDAQ, Bitcoin, or whatever, just form a giant M right at the top, you know? Because I don't know, it look kind of like a W reversal right here, right? The bounce. Look, I mean, I'm pretty convinced by this W here from, you know, the past month or whatever. Looks convincing to me, but like, oh man, that's quite I think that the previous top is gonna really pose some resistance, huh?
Yeah.
Doesn't it look that way? I mean, just from the chart, right?
Doesn't look so good. Hang on, let me pull up my trading view and see if I have any markings on it. Ethereum. Maybe. Well, it depends on how many people have. Oh, Yeah, there's a lot of overhead pressure up here.
Yeah.
Yeah, well, if we can break, we need a whole ton of volume to break this level. Hang on. Yeah, yeah, I don't know. But Ethereum and Bitcoin have been doing really well for me, stabilizing my account value.
It's good.
Yeah, but
Good.
we
Yeah, I've
have,
just been getting knocked around all year by, I mean, for months and months, really.
yeah, I
Wrecked.
think if we can see another leg up on Ethereum and then hang out above 3,000 for a while, I think we could see an rotation back in. What does the Ethereum Bitcoin chart look like? Is it still lagging?
Yeah.
There it
Well, I
is.
mean, the currency is perfect for various types of like humanitarian crises, right? I mean, I
Yeah,
heard the Ukrainians and the Russians are using Bitcoin more now that
yeah,
they're having
yeah,
this conflict.
yeah.
Oh
All right, there we
man,
go.
can I? Huh?
Mullen sold off.
Sorry, go ahead.
MULN is selling
Yeah,
off again.
that thing sounded like junk. They're just blowing it up in some Discord chat for a minute.
But this thing has traded 239 million shares today.
Unreal.
Granted, it's only $3, but still, that's $600 million in trading volume. Somebody's making money. Did you see Ray Dalio's Changing World Order YouTube video?
No, well, maybe. Did he
Came out
put
a
it out
couple weeks
just
ago.
recently?
Yeah.
Okay, no, I haven't seen this one.
So his thing is that there's been rises and falls in empires. So he goes back to like the Dutch, the British, and then the Americans.
Yeah.
And he says that all of them follow a specific pattern. It's like there's a revolution, and then in the revolution, everybody works hard to work together, builds a country. And then that's through like education, infrastructure, systems, good leadership. And then as we get to the peak of that, people start getting lazier because they start enjoying the finer things in life. And then the companies, not companies, the government starts printing money because now we're borrowing more money than we can pay back because we're the world reserve currency. And then there is a new power that comes up, and either through via civil war, conflict, or whatever, new power rises, and then that's how it's been for the past like 500 years. That's been the cycle, 3 cycles. And so he says that the next world power that's going to come up is going to be China, because the U.S. has over leveraged debt, right? We have too much debt. We're printing money. We are the world reserve currency, but it's not pegged to anything, so we can borrow as much as we want. And China, on the other hand, we're borrowing a lot of money from them because they're poor and they're savers and they work really hard, according to this video. And he says that what will happen is that the world reserve currency will move to the yuan because China has a lot of real assets and commodities. And so I don't know how you can capitalize on this. I mean, being long yuan is not a good idea, not right now anyway. And also being long China stocks, I mean, it was a good play like last week, but right now they're kind of pumped up. I mean, I wouldn't touch them right now. Like Baidu and Baba are up like what, 50% from last week.
Pretty good.
Look like. Yeah, Baba was at 80 last week, and today it's at 115. So it's ridiculous. And I mean, I like the concept, like the video, was a good concept to me. I think it probably will happen in the next decade or two, but there's no actionable information on it, you know? It's like a conspiracy theory that could come into fruition,
Right.
and I don't like
Right.
that
And
because
be derailed at any point by a
yeah,
government.
right.
Yeah.
So to me, it's not useful. It's a good
Mhm.
thing to like talk about, you know, like at a dinner party or something, I guess, or on a podcast. But it's not something that can not really actionable. There's nothing I can do with it. Like if I say I'm gonna go long China, like I might I might have missed out on the biggest Nasdaq bull run we ever have, or maybe XLF goes like 30% in the next 2 years, and I missed that entire move because I'm in FXI or something, you know?
Right, right. At least if yeah, I would think if you lost money betting on US stocks, you'd feel just a little bit better than losing money betting on Chinese stocks. Yeah.
Yeah, yeah,
I don't know why.
yeah. I mean that's true. That's very true. That's how I feel. That's why I'm not gonna be buying any. I mean, not long term anyway. I'm not gonna be long term. That especially if the U.S. still controls the stock market.
Yeah.
You know, I mean,
Yeah.
they could threaten these things from being delisted again, and then there it goes, tumbling back down.
Right.
So I
Yeah.
don't
There you go.
I don't like that. I don't agree. None of it's actionable. But anyhow, Andre Geek, the YouTuber. I don't know if you ever
Yeah.
watch Andre Geek.
No. Andre Geek.
Yeah, but he said that he's a real crypto. He likes crypto. But he buys and he's a dividend investor and he likes cryptocurrencies. But he said that he thinks that this analyst who worked at the Federal Reserve and all this stuff, I can't remember his name somewhere, but he wrote a white paper said that the next world reserve currency will base its value off of Bitcoin. So it, you know, like we used to be linked to the gold standard in the US, the next world currency will link their their value to Bitcoin because Bitcoin
Whoa.
is a trackable. There is a finite amount of them, and it's easy to hold in the reserves because it's 100% traceable.
Right.
So he said that that would probably be the next world reserve kind of peg as Bitcoin. And I thought that's an interesting point there, but still
It
nothing
is.
actionable. I mean, I own some Bitcoin, but I ain't gonna buy a whole Bitcoin. You know, at
Yeah.
$40,000, that's a lot of my assets devoted to one belief.
Right. And if I mean, I would think the basic premise of that happening is that Bitcoin would gain a substantial amount
Yeah.
of stability.
Yeah.
And so, I mean, just look, what's the average price of Bitcoin over all time, right? It's probably like $5 or something, right? I mean,
Yeah.
it's been a lot less than it is
yeah.
now
Yeah.
in most of its history. So, you know, what is the stable price of that thing? It's a huge question mark, right?
Yep. I mean, Bitcoin started off at like nothing, and
Nothing. Yeah, nothing.
so I mean,
Right.
if we were to look at like the whole thing, barely has history.
Yeah.
2014 started off
Was
at.
that right?
That's what it looks like. Well, that's the furthest with charts to go.
Oh, I think it was around before that because I remember my friends telling me about it before 2014.
Yeah, I think it's like
Bitcoin.
2010 or before.
But it
But
was
that's how
just
far
like
the
kind
charts
of
go.
either very surreptitious or very nerdy kind of thing, right? I mean, back then,
Oh yeah, I mean,
who the heck was using Bitcoin?
yeah, back then Bitcoin was like used for black market transactions.
Right. Silk Road.
Yeah, but it looks like the average price probably about 800. Were to average the price over the entire time it was alive.
Okay. Yeah. So when Bitcoin's at 800, put me down for 10%.
I think what Andre Geek was saying though, that if it becomes a world reserve currency, that means that the whatever would have to dump in like $1 trillion into Bitcoin, which would raise the market cap by double
Oh,
and
oh
potentially double
wow.
the price of the entire like of Bitcoin, because if you double the market cap, then of course the price of Bitcoin will double, right? So that's what he was saying. And some
But if
people
you
said
dump a
that,
bunch of money into it, why and then the price goes up and it becomes a volatile thing, then why would you want to use that and peg your currency to it?
I don't know, it's just like gold, right?
Yeah, yeah. I
So it's just
guess a lot of people do still want to go back to the gold standard, huh?
yeah,
Does Ray Dalio want to go back to the gold standard? He does, yeah.
I think so.
He's a gold bug, isn't he?
I think so. Yeah, he believes that. Well, he said that it was really interesting when he was trading in the stock market when we came off the gold standard. He didn't understand that like gold, or that the stock market would rally after this terrible news, right? As someone from an economic mindset would be like, well, if we get off the gold standard, then what is the dollar worth? It's worthless. But he said what
Yeah.
happened was people started buying stocks, because stocks can go up with the dollars you put in them, because the dollars are worth less. If you're buying stock 1 to 1, like if the stock's worth $1 today, but you know the dollar is going to be worth 50 cents tomorrow, you buy the stock now, the stock is $1, and then tomorrow it's going to double in value because your buying power of the dollar went down by half, but the stock is still the same. So
Mm.
he said when he was trading, he didn't understand that concept until it happened right in front of him, right? He was a clerk on the stock exchange. So I think,
Mhm.
and it's so unfortunate that the wealth gap gets bigger and bigger as people don't want to invest money.
Right.
It's just, I was listening to a podcast with the Insurance Pro guys and Insurance Pro blog, and they always talk about life insurance because that's what they do. They sell life insurance, and
Mhm.
how like you can use life insurance cash value as a place to borrow money and store money. And I agree that if you are looking at a bank or your life insurance policy, a life insurance policy is a better place than the bank. Just because you don't have to withdraw money to take out money. You can loan money to take out money, and then you can pay it back. And with loan, you don't have to worry about income tax. You don't have to worry about with a life insurance company, you don't have to worry about collateralization or credit checks because it's your own money. You just loan it out so that you don't have to worry about all that stuff. Loan interest will be taken out, but the interest is usually going to be washed out by the interest your account gains from the cash value that's still in there. So you get like a wash, interest wise.
Yeah.
So that part makes sense to me that yes, this is a good idea, because if not, what do? You sell stock to get money to pay for things because things are going up. But
Mhm.
still, it doesn't provide an answer, right? None of this stuff provide answers.
Mhm.
I mean, who's gonna be buying crude? I mean, we could go and hedge right with wheat and with soy and corn and crude, but those markets are even more volatile than the stock market.
Right. Right.
So I can't figure out what the answer would be. I mean, even if we try, like nat gas is up 5% today, oil was down.
Mhm.
But I mean, would you hedge with natural gas? Not really. Natural gas is so crazy. I wouldn't hedge with natural gas.
Yeah. Yeah. My friend called me the other day and he was saying how he had bought I forget what the new, they delisted the old leveraged natural gas ETFs, the ones
Mm-hmm.
that went up and down. It used to be UGAS and DGAS. Now it's some other ticker, right? And he's like, yeah, I threw a bunch of money in there. I'm like, wow. And I was like, well, he didn't even understand that it's a leveraged ETF. And he was just looking at the chart like, this has never been lower in history. And so he's like, natural gas has never ever been this cheap before. And now somebody told me it's going up. So I should buy this one. And I was like, wow. and he said he was already up on it, and I told him, man, I don't know, dude. Like, why don't you, if you're bullish on natural gas, why don't you buy UNG or something, right? I mean, so he ended up getting out of that position just because he realized, I mean, the negative consequences of what do they call that? Time decay?
Yeah. It's the
Yeah.
cost to carry
But I
it.
have some, right?
You have some nat gas positions.
Just some UNG and covered call. It's deep in the money now. April. So I'm trying to roll out for a credit.
UNG, not so bad. Would I be bullish in UNG? I didn't like the chart in nat gas. I don't think I like the chart here either. Yeah, you can't trade. I can't trade this. This is ridiculous. 4 hour maybe. Maybe the 4 hour chart looks a little bit better. Daily looks like hell though. Yeah, this is. That's the thing with a lot of these commodities. The charts never look nice, because
Yeah.
they can stop them out, and then like inventory report comes out, and then it goes all crazy. Doesn't really follow a nice pattern.
That's why I thought this one was good to just have a I picked up shares at about 950
of UNG.
Yeah, it was a while ago, and I've just been continually just rolling calls, taking credits. When UNG moves up or down or whatever, then I make little adjustments to that. Just try to collect some extra money. I thought, oh, it's kind of cool how it bounces up and down so much. So
yeah, there's this guy on Tasty Trade. Well, he's not on Tasty Trade. He's just a regular retail investor. But he has an Amazon position, and he just sells covered calls on it. And he makes like, I think
what position?
Amazon. So I mean, he's retired. It's in his IRA. So he sells. He makes about, I think last year he said he made about $75,000. He'll show his Thinkorswim account, and he has like year to date his call options on his Amazon position. He made like $50,000 or $75,000. I can't remember. Like a large amount of money. I was like, dude, that's a pretty sweet position. You guys like, yeah, I just write covered calls when the stock price bumps up. Like if we have a long run, I'll sell it, and then when we pull back on a bad day, I'll roll it out, or I'll sell it out, or buy it back for like half the credit, and I just keep doing that.
Yeah, because that's my question is, how do you have a continually rolling calls on a stock like Amazon that just keeps going up? But you're saying he in the short term he pulls out and then buys, so he's got to keep timing the market then.
Yeah. And the typical like for Tasty Trade mechanics is you would sell the second month. So you would, if we're in March now, we're almost at the 23 days in April. So you'd probably sell May. You'd probably sell the May. Hang on, let me just get this so I can see how much these things cost. You'd probably sell a May 30 Delta call. So you'd sell the May 30 Delta call for $600 or $6,400. This is $3,600. Right. So the likeliness of you getting between now and 59 days away that Amazon hits 3,600, that's a 10% increase in 2 months. The likeliness of that happening is pretty low. So you'd probably sell this out here, and then when Tasty Trade Mechanics is 50% profit, so when you receive 50% of the credit, when the 3,600 call is trading for 3,200, you would buy it back, and then at that point you would wait again for a pop in both volatility and in stock price, and then you would sell the next month, June. So you do have to time it to a certain extent, but I mean the indicators, you wouldn't be like day trading it, huh?
right? It's like fishing or something. You just
Yeah,
setting it up with the strategy,
yeah. And then I mean,
waiting for the right moment.
the way like one of my friends, he was telling me, well, Matt, why would I sell a call if you know I'm bullish on the stock? I said, well, if you're bullish, because I use Apple a lot. So let's say I did a covered call. He's like, why would I long? You know, if I'm long Apple, I think Apple's gonna go up. You know, why would I ever sell? And I said, well, if you think Apple's gonna go up to like 180 in the next 60 days, wouldn't you
Mhm.
want to sell a 180 call for like, let's say like 275 bucks? And if it's
Right,
trading at 168 now, you make 12 bucks in the call being, you know, the stock price, and you
right.
make
Plus,
275 on the, that's a, that's a huge gain in like 60 days. It's a good deal.
right,
And if you still want to
right.
hold the stock, then you roll out the call option.
And if you're wrong, you reduced your cost
Cost
basis.
basis, yeah.
It's beautiful. Yep.
So,
Covered calls are nice.
and then
I bought a couple of covered calls on Sundial today.
what ticker is it? SDNL?
Yeah,
SNDL?
SNDL. Sundial. I mean, they just keep
Nice.
dodging a bullet on not getting delisted, right? At whatever 50 cents or something.
Oh yeah, they're only 50 cents, 58
Yeah,
cents.
yeah. So they keep getting exemptions or something from. I mean, it's on Nasdaq, isn't it?
Yeah.
Yeah.
How is this thing still here?
It they giving it a pass. I'm telling you, it's trippy, huh?
This this stock is these options, there's weekly options for this.
It's blown away. Yeah, that stock is like the price is blown away, but they've allowed it to keep trading.
This thing was like $1 last year and now it's 50 cents.
Yeah, yeah. So I think I'm like long. Oh, I don't know, 3,000 shares or something of freaking Sundial. Funny, yeah.
You could
I'm in
sell
the
all
red.
kinds of calls.
Yeah, yeah.
Oh no. Well, I guess that'll end today's podcast. I'll try to call him up after. Well, see you guys later.